Are you thinking about applying for your first credit card? Here are some common mistakes to avoid. The first mistake is applying for too many credit cards. This creates too many inquiries, which can negatively affect your credit score. An inquiry is when someone requests to pull your credit history, and that makes up 10% of your overall credit score. It also becomes too difficult to keep track of balances and due dates. It becomes too messy, especially if you're a beginner. You also run the risk of potentially missing a payment, which will just hurt you down the road, especially if you plan on making a larger purchase in the future, for example, a house or a car. The higher your credit score is, the better your interest rates will be. Having on-time payments is extremely important, making up 35% of your overall credit score. A tip to keep in mind to help you manage your cards better is setting them up on autopay. Ideally, it's best to set the autopay to pay the full statement balance to avoid interest charges. But at the very least, you can set the autopay up for the minimum. The next mistake to avoid is applying for the wrong type of cards, such as store cards. They usually have lower credit limits, higher interest rates, and limited use. Stay away from cards that offer no rewards. If you're going to spend your money, you might as well get the most out of it. But make sure you're not justifying your purchases for the points. Do not do that. That is stupid. Be mindful when applying for cards that have annual fees. There are free options available until you get used to knowing how to properly use a credit card. Some of these fees can go up to $700. For example, compare it to buying a car. You want to take it out for a test drive. Get comfortable with it before you commit. Another mistake is maxing out your credit cards. You want to make sure you're staying under 30% utilization, ideally 10%. As a beginner, you most likely will get approved for a $500 to $1,000 credit limit. Let's say you get approved for a $1,000 credit limit. When the statement balance is generated, it cannot be larger than $300. If you find yourself needing to spend more than $300, you need to make payments before the statement balance is generated. Keep in mind you can make as many payments as needed. Just because you have a credit limit of $500, $1,000, whatever it is, does not mean you get to spend up to that amount. Even if you pay in full with no interest, it still gets reported negatively because you maxed out your credit card. Another mistake is not treating your credit card as a debit card. To make it simple, if you don't have the money in your checking account for the purchase, do not purchase it. Do not rely on money you do not have. The last mistake is closing your credit card. When you close your credit card, you are removing your credit history, which damages your score under the length of history category, which makes up 50% of your score. The longer your credit history, the easier it is for banks to make a decision based on your track record. It's best to keep your credit card open and use it occasionally. If you found this video helpful, please make sure to like and subscribe to help our channel grow. Drop a comment below of topics you want to learn more about.